Cryptocurrency has come a long way to the year 2023, and besides many ups and downs like the Terra Luna crash and the collapse of the second largest cryptocurrency, FTX, the cryptocurrency market is still growing, with more mainstream adoption and institutional involvement. The rise of decentralized finance, DeFi, and non-fungible tokens, NFTs, is going to play a major role in the growth of the cryptocurrency market. Additionally, increased regulatory clarity and the introduction of new infrastructure for cryptocurrency exchanges and payment systems will lead to greater stability and security in the market. The outlook for the cryptocurrency market in 2023 is optimistic, with experts predicting continued growth and increased adoption of cryptocurrencies. So, in today's video, we're going to discuss the recent State of the Crypto report by A16Z, and we'll go through the crypto market cycle, recent trends, metrics and indicators, and predictions to have a clear idea of what we can expect from crypto in 2023. But before we proceed, it's important to note that this video is solely for informative and educational purposes and does not contain any financial recommendations. So when investing in the crypto market, exercise extreme caution and always invest at your own risk. So, are you ready to learn everything about cryptocurrency in 2023? Let's get started. First off, the report touches on a few key points that are all related to one another. One of the biggest setbacks in the crypto world has been centralization. Some entities have been trying to maximize their gains in the market cycle, which has resulted in bad regulations. This is where decentralization comes in as the solution to both of these problems. The report also discusses the evolution of the internet and how crypto blockchains are more than just ledgers. They're actually computing platforms that offer more than just an alternative financial system. However, the report does point out that replacing the existing financial system should be the top priority for crypto projects and their backers, as the current trajectory of the financial system could lead to the loss of financial freedom. The report then discusses the crypto market cycle and how a positive feedback loop is to blame for it. Prices go up, which causes interest to go up, which causes new ideas to emerge, and so on. The authors focus on financial and product cycles, which apparently follow a 4-year cycle. Macroeconomic factors like interest rates are what drive financial cycles, whereas predictable consumer behavior and technological trends are what drive product cycles. Next up, the report covers crypto trends to watch. The authors highlight new Layer 1 cryptos like Solana and Aptos, application-specific cryptos like Cosmos and Polkadot, Layer 2 scaling solutions like Optimism and Polygon, and data storage cryptos like Celestial. They also note that a higher interest rate environment could take the wind out of competing Layer 1s, given that they're arguably the most speculative cryptos out there. The report also praises Ethereum for cutting down its energy use by 99.9% by changing its consensus from proof of work to proof of stake. The authors make an odd comparison between Ethereum and YouTube's energy consumption, but they also commend the fact that just $40 billion worth of staked ETH is able to secure over $400 billion in assets on Ethereum. After covering the rising popularity of zero-knowledge proofs and NFTs, the report dives into the rapid growth of Web3 gaming and participation in DAOs. However, the authors do point out that the percentage of crypto developers in the United States has been declining for years, which could be due to the initially uncertain and now hostile regulatory environment. Moving forward, the fourth part of the A16Z crypto report covers a series of crypto market metrics. The author starts off with an image that basically says, if you build it, they will come, in a more elaborate manner. This approach to adoption has been popular in the cryptocurrency world, and so far, it's worked well for the most part. The first crypto market metric discussed is the number of active developers. The authors found that the number of active developers rises during bull markets and stays high during bear markets. This is consistent with the findings from Electric Capital's Crypto Developer Report. It's interesting to see how developer activity is tied to market conditions. The second crypto market metric is the number of smart contracts. It's not surprising to see that this number continues to hit new all-time highs despite the crypto bear market. Smart contracts can't be deleted once they've been deployed, so their number always goes up. This is a positive sign for the industry, as smart contracts are a key feature of blockchain technology. The third crypto market metric is the number of academic publications related to crypto. It's also not surprising to see that this number spiked in 2021 and has come down slightly ever since. Interestingly, the number of academic publications also spiked early last year, which could be related to the terrorist collapse. The last part of the A16Z crypto report is all about what's next for the industry. The authors start off by estimating that crypto adoption is where internet adoption was in the mid-1990s. If adoption follows the same trajectory, it'll take until 2031 for crypto to reach 1 billion users. It's a pretty big number, but there are a lot of crypto projects that promise to reach that milestone much sooner. The report goes on to provide a list of crypto adoption indicators. The first indicator is the number of active crypto wallet addresses, which continues to hit all-time highs. However, the authors are skeptical of this indicator, as it's easy to fake active wallets on newer blockchains. The same is true for the second indicator, which is the number of crypto transactions. While this indicator also continues to hit all-time highs, low transaction costs make it easy to manipulate the numbers. The third indicator is the number of transaction fees paid, which has been in the toilet since the crypto bear market began. The authors point out that off-chain indicators, such as search trends and price action, are much more consistent with this trend. The fourth indicator is the number of mobile crypto wallet users, which continues to decline. The authors recommend keeping your crypto on a hardware wallet if you're not actively trading or engaging in DeFi activities. The fifth indicator is the amount of trading volume on decentralized exchanges or DEX. While DEX volume has been on the rise recently, the authors suggest that this is likely due to a crackdown on centralized exchanges. The sixth indicator is the number of NFT buyers, which has skyrocketed in the last few months. The authors point out that this could be due to NFT prices going down and new buyers buying the dip, or it could be because NFTs are seen as safe from regulation. The seventh and final indicator is stablecoin trading volume, which continues to grow. This could be due to the crackdown on centralized exchanges and the loss of trust that occurred after the collapse of FTX last year. Finally, let's take a look at the 12 things that an A16Z crypto report expects to happen in crypto in 2023 and beyond. There are some interesting predictions here. The first expectation is that some of the best Web3 products and protocols will be developed during the remainder of the crypto bear market. This is an exciting prospect, especially since some of the best products are already out there. The second expectation is that smart contract security will improve. Unfortunately, the authors don't discuss the role of AI in this equation, which would have been interesting to explore. The third expectation is that zero-knowledge proofs will continue to become more popular. This makes sense, as institutional investors require financial privacy and zero-knowledge proofs can provide that. The fourth expectation is that big tech will continue to take greater control of the web and the internet, which will highlight the importance of Web3. We've been talking a lot about this in the context of internet censorship, and it's become clear that decentralized social media could be the only solution. The fifth expectation is that Web3 gaming will become more popular. We've also been talking a lot about this recently. There are 3 reasons why people adopt crypto: speculation, necessity, or entertainment. The third category of adoption has yet to be fully tapped, but it's coming. The sixth expectation is that there will be more crypto-specific hardware, particularly for zero-knowledge proofs. This is a bit concerning, as the centralization of hardware could lead to centralization issues. Some would say that crypto is already suffering from hardware centralization issues. The seventh expectation relates to the fourth, and that's the decentralized social media will become popular due to issues with centralized social media. This is a great opportunity to stress that internet censorship is coming, and the only way to stop it is to contain the truth. The eighth expectation is that light clients will make it possible for mobile devices to become more involved in crypto infrastructure. Over 90% of people access the internet from a mobile device, so bringing crypto to mobile is a massive untapped opportunity. The ninth expectation is that there will be new kinds of community governance in DAOs. Existing token-based voting systems are leading to centralization, so a radically new approach to governance is required. The 10th expectation is that governments will pass bipartisan crypto regulations. This applies to crypto regulations in other countries too. Politicians will realize that crypto is an economic and social opportunity, and there are plenty of crypto lobbyists running around these days. The 11th expectation ties into the 5th, and that's that non-speculative crypto use cases will emerge. We hope that these use cases are related to convenience rather than necessity, as the latter could mean we're dealing with some seriously dystopian stuff. Finally, the 12th expectation is that hiring, treasury management, and sustainable funding will be a focus for DAOs. This seems to be a subtle reference to a new crypto niche called ReFi, or regenerative finance, which involves investing in tokenized carbon credits. It'll be interesting to see how this develops. So, let's talk about what the A16Z crypto report really means for the crypto market. What's interesting is that the report seems to reveal more about how institutional investors view the crypto market than how it's actually doing or what its future holds. These investors want to be at the forefront of Web3 and cryptocurrency, but they also want some control over how these projects and protocols are run, which goes against the decentralization that's at the core of crypto. That's why they're so focused on crypto regulation, even though these regulations may contradict the very philosophy of crypto. What's interesting is that retail investors like us will eventually have an advantage over institutional investors. Most of us understand that there's more to crypto than just making profits. While institutions will likely sell every time a coin or token hits some arbitrary price point. This means that retail investors will continue to buy regardless of the paper price, while institutions will be left behind. And when institutions do eventually realize the value of true financial freedom, it may be too late. Retail investors who recognize the potential of crypto early on will become the new institutional investors, while institutions that miss out on the opportunity will have their assets tokenized on a blockchain under government control. So, while it may take some time for crypto to truly reach its potential, the future is looking bright for those who understand the importance of decentralization and the true value of crypto beyond just making a profit. And that wraps up today's video. We really hope you found it informative and learned something new. If you have any questions or comments, feel free to share them in the comments section below. Also, don't forget to subscribe to the channel and hit the bell icon if you haven't already so you never miss out on our daily informative videos. Thanks so much for tuning in and best of luck!